Is India's economy heading into a recession? Well, these concerns are growing because when you look at macroeconomic data that has now been coming out week after week, the signs of a slowdown are clear. The question is the government seized of it, and does it have a plan to get India out of this economic crisis? If you look at some of the numbers that have come in just the last 24 hours, today, the markets, for instance, closed at a 5-month low. You have auto companies, major auto giants today that gave out their sales figures. For Maruti, it's a 2-year low. Their sales are down 33.5%, the lowest since June of 2017. Mahindra & Mahindra sales are down 12% year on year. So are Bajaj Auto sales down by 5%. Domestic sales for Bajaj Auto down by 13%. For Escorts, more than 13% as well. These are again worrying figures in the auto sector, which is now leading to concerns about job losses that have already started in that sector. And then you have the core sector data that was released just last evening, and that shows that the 8 core sectors have grown at just 0.2% in June of 2019. That is a nearly 4-year low. Well, joining me first to talk about what is happening with the economy is Kiran Mazumdar-Shaw, the chairperson of Biocon Limited from Bangalore. Kiran Shaw, first of all, looking at all these numbers, core sector growth down, the auto sector numbers released today, which are very bad, the markets that are in a slump. How concerned are you about the state of the economy and the signals that we are seeing?
You know, I am very deeply concerned because I'm one of those optimistic, members of India Inc. that feels that India has this huge opportunity to boost economic growth. I'm fully aligned with, the Prime Minister's aspiration of becoming a $5 trillion economy. And I really believe we can. But the point is we have to do things differently. And I think that all the signals that you're seeing today are indicating that our economy is slowing down. For the first time, we are seeing China overtake India in terms of GDP growth numbers this quarter. I understand it's come down to 5.8 and China is at 6.2. So I think the signals are out there. The alarm bells are ringing. We cannot be in denial anymore. And I think this is a time for the government to reach out to India Inc. and say, okay, let's sit together and work out what we need to do to boost economic revival.
Kiran Shaw, we also heard Rahul Bajaj's concerned voice just a few days ago that there is no demand, that there is no private investment. As he said, growth will not fall from the heavens. So there clearly needs to be a plan. And in your view, what is then needed at this point to reverse what is happening?
So, Nidhi, if you remember, the chief economic advisor put out a very good economic plan which talked about starting a virtuous cycle of investment, consumption and jobs. And I completely agree with that approach. You have to kickstart that virtuous cycle. Now, in order to do that, investment needs capital, investments needs money, investment needs profits. And if you look at consumption, as you rightly said, there are many sectors that are, not able to utilize their capacities. So we are seeing declining capacity utilization and we are seeing slowing consumption. You've seen that, many of the, FMCG companies and the white goods producers are really seeing their businesses slowing down. So if you ask me what are the 2 quick fixes, definitely I think the 25% corporate tax should be made available across the board. This business of saying that 99.3% of corporate India is covered is absolutely not really giving you all the right statistics, because 0.7% of India Inc. that is not covered by the 25% corporate tax rate is actually contributing 93% of India Inc.'s turnover. Where is that investment going to come from? The investment has to come from this very small 0.7% of India Inc. And if that happens, it actually has a multiplier effect. More profits means more money to invest. more investment means creating more demand and more jobs. That's more important. Now, when it comes to consumption, why can't we do away with the 28% GST? What is so difficult about that? How can you basically justify that almost 1/3 of the cost of a luxury car or an AC is GST? I mean, you are absolutely deterring consumption by these very high GST levels. I mean, is air conditioners really a luxury item anymore?
But you know, Kiran Shaw, all important points made by you there. When you look though at the steps taken by this government in its second term, ironically, a government that was supposed to be business friendly, have they ended up actually hurting business sentiment further? When you see, for instance, from the higher taxes announced in the budget to the penalties now on companies if they don't comply with corporate social responsibility targets, there are complaints that Inspector Raj is back in full force. So how does all of this actually hurt business sentiment and investor confidence?
Absolutely, because I think India Inc. does feel alienated. I think we have clearly seen that because of this fear of being seen to be close to business, the Indian businesses, and this whole aspect of crony capitalism, I think we have seen the government totally distancing itself from India Inc. And yet it is India Inc. that will actually contribute to strong economic growth. So I don't see why this is happening. I think that trust deficit has to be bridged. I think India Inc. and the government must work together to really boost economic growth. Without that, I can tell you that we are going to be in denial, and the government should not be rigid about taking its stand after the budget. Things need to happen. You need to take some bold steps in terms of reviving the economy. So be it if you have to roll back some of your budget statements. I mean, look at what's happening in the stock markets. This whole, they've spooked the market with this, surcharge on FPIs and on share buybacks. I mean, all this is actually not at all good for investor sentiment. And therefore, you have to look at some of the things you've stated in your budget, and you might have to roll back many of these measures.
What exactly would you want to see rolled back, if I may ask, from the budget?
I think in all these areas that I talked about, I think GST has to see, has to get rid of that 28% GST slab. I think you do need to really look at all the sectors that are suffering and probably relook at what GST you should impose on these sectors. I think the 25% corporate tax rate across India Inc. is very important because it was promised in the first term of the Modi government, and they should deliver on it right in the start of this term. I thought it would happen because, Arun Jaitley himself promised it right in his first budget speech, and it's about time that they actually made India Inc. much more competitive with all the tiger economies and every other economy in the world that has lower corporate tax rate than India today.
All right. Well, Kiran Mazumdar-Shaw, thank you very much for sharing your views on how you see the state of the economy. It is actually very rare to see India Inc. speaking out in this way when it comes to the state of the economy. Rahul Bajaj has done it, Kiran Shaw has done it, and some other voices also coming now forward and speaking out much more loudly.